Hello and welcome to Unlock Your Life. I'm your host, Jennings Smith. Guys, I've got a guest on the podcast today, Richard Wilson. He is the founder of Family Office Clubs. He's also a third generation Eagle Scout. I was talking to him a little bit about this before we got onto the show, and he hosts these massive events and a ton of them, 12 to 24 meetups with 70, 80 people attending those. And then once a year, coming up actually this December 9th, he's hosting a event in Fort Lauderdale. There will be 850 people there. He's got family offices. He's got high net worth individuals. He's got people pitching deals. He's got people raising money. He's got billionaires in the room. This is a guy that is plugged in with the money, helping them manage it, helping them place it in good deals, and building a culture and a tribe around that. So Richard, man, welcome to the show. I appreciate you being on.
Yeah, awesome. Thanks for having me here, Jennings.
So as somebody that has hosted events, I know it's a lot to build a tribe and build a community. And the thing that was unique about what you said was these are not like you're selling tickets to these events. You're building a community, you're building a tribe, and these events are for that tribe. So how did this thing kind of evolve, and what do you see as special about it?
Sure. Well, I got started raising capital, found out there's something called a family office, like an ultra wealthy investor. And I was like, well, I'm just only going to talk to them. And I found that very hard to do. And there was no trail guide for me. So I started a blog and I talked about raising capital, family offices, one or two other things. And the family office stuff took off. So I got invited to speak a couple hundred times in about 20 countries. And while doing so, I saw that everybody running these events were just cubicle jockeys for big media companies. They didn't really know the industry that well. And I was like, you know what, I could do this. I did a cocktail hour and I did a one-day event. Then we started hosting conferences. But the problem is we'd bring in like $300,000 one month and then like $20,000 the next month if we don't have an event coming up. So we were like a nonprofit some months. And I was like, well, that's not too smart. And then like investors really like to see familiar faces and build trust. So it just makes more of a sense of community to have a real investor club, not an investment conference. So that's how we got to where we are now.
You know, that is such a critical point because, my group, people jump in and they want to find people to help them sponsor loans. They want to help people, they want to find people that'll co-invest with them or raise money for them. And that's great, but that doesn't happen within 1 or 2 weeks, right? You have to build relationships and see them. You see them at live events, you see them on the Zoom calls, you have one-on-one calls, we have small group accountability. And these partnerships, people that have been in the deal room for a year, 2 years, 3 years, it's like they have a wealth of connections, but they've built them over time. And when you go to a one-off conference in Las Vegas and you meet some guy, it's like, are you really going to do a deal with that guy? I mean, maybe, but most of the time, that trust just isn't there yet. And it shouldn't be. You got to build that.
Yeah, it's comical how obvious that is to people like you and I, and how non-obvious that is to other people, right? They come in, they're like, hey, can you make introductions? I need to get these deals done. Like, hey, do you know anyone investing in this right now? And I'm like, well, I'm not raising capital for mobile home parks right now. So yes, I've spoken to hundreds of investors here in the room, but I'm not waving the mobile home park flag and poking them with it. Like, that's your job. And like, by the way, even if I had your exact same deal, you may say it with a smile and I don't explain it the right way and you articulate it well and you connected with them and they liked your sense of humor and had dinner with you. They may invest in you, not me, on the exact same deal, or me, not you, because they know me much better. Like, the context and the trust matters way more than whatever number you put on your piece of paper. Like, anybody can put anything with AI on any piece of paper. It's truly meaningless without trust, right?
And that's why the guys that are in this field for a long, long time and have longevity, it really becomes easier and easier and easier to raise capital. And it is hard to start in the beginning because you don't have a track record, you don't have those relationships, and people don't want to spend the time to build those. But if right. It's just worth it, right? I was in another mastermind for 3 or 4 years, and the first year I didn't really do a whole lot of business with the people in that group because I was just kind of getting to know them and they were getting to know me. And as those relationships grew, that grew into a lot of friends that, I'm still friends with them today, 6-7 years later. And so I like that. It's not as flashy as, hey, join this group and you're going to raise $1 million in 3 weeks, but it's realistic, right? Where this is really where the money lives. And if you want to build these relationships, it can be a part of what you're doing. So kudos to you for understanding
Totally.
that model and that tribe building. Um,
Yeah. I think like amateurs look at this and they see it the wrong way. They see it as like, I need to raise money in the next 2 weeks. And like the more stressed out and high pressure you are, the least likely you are to make anything productive out of the event. And the savvy people in the room, they know that by going and hearing from decamillionaires and centimillionaires, they're going to structure deals better, source deals better, vet and due diligence them better, avoid frauds faster, avoid waste of time, get the mental models of billionaires and centimillionaires. Like you get 10 sources of ROI if you're not obsessed with what you're trying to close this week. And you're more likely to close things this year if you're not like stressing everyone out with your like high pressure pitch, you know?
yeah, it's people want to avoid risk, right? And we have this filter of like, you want to say no. You want to say no as quickly as you can so you don't have to spend time thinking about their deal and getting to know them. And you want opportunity, but your brain is lazy and it's trying to filter out most of the stuff. And when you're needy, you're projecting red flags, you're projecting warning signs oh well, if nobody else is investing in this guy's deal, maybe there's something wrong with it, so I'm not even going to look at it. And that neediness and that pressure, it gets you the exact opposite of what you want, which is and the converse is like if you have a deal that's already halfway filled up and the raise is going easy, all of a sudden it gets oversubscribed and you don't have enough room. And those last 2 or 3 shares are the easiest to raise because now there's FOMO of like, man, I'm not even going to get a slot if I don't, hear this guy out and see what he's got. So.
Right. Totally. Totally. And I find that like one thing that people mess up completely is not having something that's so unique that as soon as people hear it, they lean forward and say, how did you get that? Is that real? I mean, that sounds almost too good to be true. And I think that if you're doing 7 things, you should ask yourself, what has the most momentum, the most future demand, is most exciting, most profitable, hopefully all those things, and only do that and cut out everything else that's just mediocre noise that looks like everybody else on planet Earth. And I think if you start with that, then there's about 5 or 6 things that my investors are always looking for people to have, and 99% of people don't have them. And I can go through there real quick if you want to help people pitch family offices if you think it'd be helpful.
I think that'd be super helpful because the psychology behind raising money, I think a lot of people, they don't understand that. And they unintentionally are making mistakes and getting people to say no, even though they have a good deal.
Totally. Yeah. So this is what just about everybody messes up. First of all, you have to have that really unique idea. Otherwise, you're just kind of dead in the water from the start and you have an anchor dragging behind you. So if you have that, though, then you have to summarize your idea, your platform, your expertise, your credibility in 1 sentence. You have like a few seconds to get people's attention. So in literally 1 sentence, you have to say, in the last 13 years, we've closed 420 hard money loans. We've never lost $1 of investor capital, and 120 investors have trusted us with their money, or something like that, right? Because then this person didn't just make up this idea in their mother-in-law's basement this morning over a cup of coffee. Like it's the real deal. And so you have to have the one-liner. You have to have a 1-minute video from the founder of you basically saying your one-liner, showing your properties, showing your team, showing off what makes you unique, showing visuals. Start out with your face, talking to the camera. Could just be on an iPhone, doesn't matter. Fancy is not as important as genuine, authentic, articulate, passionate, unique. And it's just a 1-minute video. It's like 3 sentences. Anybody can do this. And if you have the one-liner and the 1-minute video, you also need a one-pager. The one-pager should have your video at the top, your one-liner at the top, the best visuals from your pitch deck, your team, your contact details. And most people don't have any of that stuff. They have a long paragraph explaining what they're doing. They have a 44-page pitch deck that no one reads the whole thing of. And they should have like a short 12 to 15-page pitch deck, a one-pager, a video, a one-liner, and be super concise. The more that somebody is wealthy, the more that they have 100 K1s, 100 LLCs, hundreds of employees, they don't have time to read your long materials, right? Like just get to the point. Are you unique? Are you not? What are you doing? How do you force appreciation? And just don't waste their time.
So let me pause you there. In the one-liner, go over again, what are the components of that one-liner?
Sure. One rule for a one-liner is if anybody is saying it already, it sucks. then kill it, right? If anybody can say it, it's also pretty bad. Like you want to say something that no one else even can say because what you're doing is so unique. Like Peter Thiel says, if you find yourself in competition with other people, like you've really screwed up. Like what are you doing, right? And so having a one-liner that is super unique, but also shows that you have extreme focus on some niche, some city, some asset class of real estate in a certain area. And then I always try to have 3 credible numbers in there because otherwise it's just fluff. Oh, we have best in class team with world class this. Like it means nothing, right? So I'd like to say things like we have acquired 32 multifamily properties. We've gone full cycle on 16 of those with an average IRR of 17.5%. We've only had, or we've had X number that have lost any investor capital, or we're trusted by this many investors. 422 investors have trusted us with their capital. That's like social proof. It's authority. It shows your commitment and consistency. But you have to have 2 or 3 credible numbers in your one-liner. It has to be super unique. And ideally, your brand name as well draws people in. 90% of real estate and investment firms have really dumb names like Wilson Capital. It's like, well, I don't know if you're investing in dry cleaners in Nigeria or mobile home parks in Austin, Texas with that name, right? Or they have a Greek god capital, and nobody knows what the Greek god stands for, and 2 people a year ask, and nobody else really cares. Like, people just want to know, like, oh, I'm a Houston Self-Storage Partners. Okay, cool. At least I know what you do, where you do it, like, and then your one-liner doesn't have to say that because your brand is sweating for you. If your brand is just sitting there, Wilson Capital, it's worthless, and people are not being driven away by it, but they're also not being attracted by it. So why would you do that? Why would you be confusing to the world and make it mysterious what you're trying to do?
I like that. I'm a GP on a debt fund, and my debt fund name is First Position Debt Fund. Because I'm like, okay, it immediately says we only do first position loans, and we're in debt. It's not equity, and it's a fund, so it's liquid. You can get the money back out, in and out. Is how I hope people perceive that. But yeah, I didn't want to name it something like Live Oak Capital, which was my first capital raising platform. So I hear that. So okay, maybe you can coach me a second here. The debt fund has done over 2,000 loans. We've lent out over $500 million, and our default rate is 0.002%. We've made every distribution for 60 months in a row, and we've never lost $1 of investors' capital. Is that kind of like how I would do a one-liner? Or what would you say to that first attempt at a one-liner?
Yeah. I would say that if you have that much track record, it's just competing what the most credible data points would be, right? Like someone who's done that much might have 12 years of a track record. They might be trusted by 300 investors. You mentioned lots of good stats there of number of deals done and, loss ratio being super low, et cetera. So I think those are all very positive things. But the trick is to write down those data figures and think to yourself, why has anybody trusted you with money? Obviously, people like first position debt. Credit is in flavor right now, but there's 1,000 credit offerings out there. So why do they really invest with you? And then you want to make sure in either wear on the sleeve in your one-liner what made them come in the first place, or what tipped the scales. But also think to yourself, when people say no, is it because they're writing off my industry as risky or confusing, or it's this or that? And try to kill that objection right in the one-liner. So before they dismiss it as like, oh yeah, it's another one of these first position funds that only pay out 9%, even though they're making 13% and a point on the end, or like whatever their thought is in their mind that you often find is the number one objection. I would just kill that up front before they even get a chance to think it. And you say, oh, well, that I was just about to say, it's another multifamily group that, buys properties from mom and pops and improves them by 10K a door, and they buy based on demographics. And it's like what everyone says about multifamily, right? Yeah. So I think it's, those are the 2 things I think on is like trying to kill the objection and lean forward into what's working.
Yeah. Yeah. I've tried to draw the analogy of this is like a money market fund where instead of earning 4%, you can earn 9% or 10% and still have that liquidity. Now, it's not FDIC insured. It's not a money market, but the vehicle is ultra safe, 65% LTV in first position. So I have used sort of that get them thinking about how does a
Cool.
money market work. It's like, okay, I put my excess cash in there, I can pull it out anytime, but instead of earning 4, I'm making 8 or 9. I've had success with that analogy. But you know,
Cool.
a
Yeah.
super sophisticated investor, they're gonna be like, what the hell, man? That ain't a money market. That's not backed by the federal government. So I try to like allay
Sure.
that objection. But
Sure. Yeah, no, it makes sense. I mean, it's good to have analogies because a lot of investors have never done a private deal. Their money's in the stock market. So with a wealth advisor, they maybe are ready to do their first self-directed IRA deal, but maybe they haven't yet. And they don't know who to trust with that passive deal that's direct and not in the public markets. So, if that is a demographic you're pitching to, then it makes a ton of sense to relate people to that.
I mean, Oren Claff, he relates it to like the blonde cheerleader. If you can use something that everybody understands immediately, it gets you further along without having to waste their time and brain power explaining it. It's like if you can say a concept that's pretty similar to what you're doing, it checks a lot of boxes so that you can move on to, the pitch. So,
Right.
okay,
Yeah, for sure.
so how do you or how did you get into this? You started to raise capital. I mean, do you operate deals or do you mostly just stay on the capital side? Tell me how this kind of evolved a little more.
Yeah, sure. So we started hosting our own events, then turned it into a subscription investor club, like membership model. As things grew, families started to ask me to help them with either finding opportunities or allocating capital. So we've helped create about 250 different family office vehicles for families and help them come up with their direct investment strategy or help them source transactions, et cetera. So we do that now for a few select families. I mean, a lot of them are basically in the tens of millions up to hundreds of millions. And we have a couple billionaires we work with. But we don't really, we don't do cap intro services. We're not a placement agent. We don't work as a broker dealer. If we can help an ultra wealthy family source things or navigate our community, great. But like 90% of our effort is really going into running the most world-class investor club we can possible. So I've spent over 1,000 hours building out our artificial intelligence platform called Investor Superintelligence, and it's all just free for our members. So there's no extra pitch. We're not raising capital for it. We're just basically offering that to our members. And what we've done is basically codified all of the best practices. And with GPT, you ask stuff and it gives you answers from Reddit and Wikipedia and who knows what podcasts. With our AI tools, the data is being fed from the mouths of billionaires, centimillionaires, 1,500 transcripts on stage at our events. But even if some AI super nerd at Google got all of our data, they don't know the nuances that you do about doing deals, right? Or like that I've learned. And so all of the structured steps and prompts and multi-step outputs and the next steps in the process to get a deal done are all codified and programmed into our 40 plus AI tools. And so that is something that we've been using to help our investors vet deals. We'll create custom AI tools for them. We use AI tools to network during our live events using deep research on each person attending, instant due diligence reports, capital raising coaching tools through AI, stuff like that.
Gotcha. So would you say the AI is most useful for an investor to pick out like, what are the risk points of this deal? What's the reputation of the sponsors and the people that are involved? And, double checking their underwriting where maybe their underwriting is weak. Is that like a focus of the AI or am I off base there?
No, you're on base. I think that out of our top 5 most popular tools, these two are what's really moving the needle for investors. The one is what you just said. It's called Dewey, the Instant Due Diligence Advisor. And I'll give you free access to that after this podcast, just so you can play around with it and use it for yourself. But you enter a pitch deck or a PPM, it will scan it instantly in about 5 seconds, analyze it in 50 different ways, and give you a risk matrix, identify what's missing, red flags, fee summary, legal structure summary, top risks, things that are major assumptions, where if those are wrong, the whole deal falls apart, and then gives you 7 due diligence questions to ask up front. So when you get pitched something, you can pop it in there, scan it over in 1 minute, get the 7 questions, send it back to the person. If they can't answer those 7, which are highly customized to the top risks, then you should just move on and not use your human brain. You should use Dewey's brain just to clear a bunch of junk out from people that pitch you stuff that's nonsense. And the second tool is called Deal Structure Ninja. This is like probably my favorite tool because it can be life changing. We trained it on 1,000 deal structures. And then anytime you're negotiating a deal, you tell it the components of the deal, what you're solving for, what the negotiation is, what could blow up the deal. And it'll go from those 1,000 library of deal structures, customize 10 deal structures for you. And you can say, well, I like number 2 and 8, but include something that offers this, include seller financing. And it does 10 more, 10 more. And then once it dials in a deal structure you like, it will offer to write you an email to the counterparty, convincing them that this is a good deal structure for everybody involved. And like those are the 2 tools that our investors are using most heavily, I would say. So you're right on with how they're using it.
Wow, that's amazing because especially with the I like the Deal Structure Ninja because how we run it is, we have a couple weekly calls and people are bringing up, seller objections and what's a good way to still make this deal work because they won't accept my price or whatever it is. And really, I mean, any deal can work given the right terms. We had a guy who is paying full ask on what a seller wanted, but because of some creative financing structures, it's a phenomenal deal for the buyer, for our student, even though he is paying full price for this deal. And so it's like, I'm the one I'm the chat GPT, because I've done, dozens and dozens of different deal structures. And I kind of think creatively like that, but to be able to systematize that is pretty incredible. So yeah, I'd love to check that out.
I'll send that over to you to play with. But I think what you just said is the most important sentence of the whole podcast so far, because so many people don't realize what you just said. And they should go back and hear you say that again, because you could take an average deal and make it amazing, but you could take an amazing deal and make it total garbage if you mess up the structure. And so many people just have no idea that that's the case. They just ignore the structure completely. Sometimes they're like, oh, what's the valuation? Oh, okay. Let me look at comparables. And that's the way they think. And it's totally wrong, right? It's 2-dimensional to think that way.
Yeah. I mean, let me tell you this really quick, because might blow your mind. The seller wanted $4 million for this deal, and it was a 100-unit apartment complex. And it didn't really work. It really only worth 2.8 to 3 million with what the guy was bringing in. And so what he negotiated was a $3 million bank loan, and then the seller's going to carry 2.4 million in seller financing. All right. So he doesn't get all the cash at closing. He has to loan back $1.3 million, which is going to pay for the rehab, which is only going to be $600,000 or $700,000. But the kicker is the 2.34 million. He's loaning it at principal only on a 30-year 30-year term, which is insane. The time value of money. And I ran that through ChatGPT, and it was basically he was able to get the deal. The cash equivalent of the deal was about 2.3 million, which would have been a phenomenal deal. So he's paying for, but in today's dollars, it's more like 2.3. So I thought that was really great job for him. And, and the seller's happy because he's getting his price. He's older. He's getting his payments every month. And, we're wiping the existing debt on it, putting new debt on. And the guy, he doesn't have to raise any money. He doesn't have to share the deal with anybody. Right. He owns it 100%. He's bringing on a loan sponsor to help him get that loan. But as long as he can execute on his plan, the property will be worth $7.5 to $8.5 million, and he'll be into it for 5.3, and that's a good deal. So.
Yeah, for sure. We just acquired an apartment complex Monday this week is when the wires went over, and similar situation. And we were able to take out a bridge loan, take out a pref equity investor, negotiate them down a couple $100,000 based on what they were due. But also our money goes in as pref equity. So we get all of our money back first. The other half of the money in the deal then gets their money back over time. But meanwhile, we're getting 75% of cash flow profits and 75% of the upside after we get our money back. And so it's just, the structure is amazing. I think there's so many deals where people told me, go away, we're never going to do this deal with you. Like when I bought billionaires.com. And then I said, well, what about this structure? And they're like, okay, if you can do that in 10 days, we'll close that deal. And they literally told me, we'll never do business with you. You've been following up with us for 12 years. Go away. Stop messaging us. And then the very next email, they did the deal with me. So it's
Wow.
like, no just means no under that structure with my current amount of caffeine and everything else going on in my life. I don't think so. It doesn't mean no forever, you know?
Yes. Yes. Absolutely. Absolutely. That and yeah, when people start to understand, like, yes, if you have to borrow money at 6.5% and you have to raise, 25 to 30% in cash, and you have to pay a 15% IRR to your investors, and you have to give away 70% of the deal, it doesn't work, right? It doesn't work under that structure, right? So
Right.
I've bought many, many deals with a seller carryback or helping, pay for my down payment, where all of a sudden this deal makes great sense. It doesn't make sense as a syndication deal and I can cash everybody out in 5 years and give them a 15% return. It doesn't work that way, but I can still own and control real estate, safely pay down debt, ride appreciation under a different structure.
Yeah, for sure. We love doing seller financing deals. I think on the last 5 real estate deals we've done, they've all been seller financing or cash only, where we're going to get debt after the closing or something. And we just like that. It's just conservative. It's almost impossible to get foreclosed on. Oftentimes, our legal team is stronger than the sellers. If you work with a bank, it's a 180-page agreement, and it's built to protect the bank, not to protect you. So it's the opposite dynamic when you write up the seller financing note yourself.
Yeah, agreed. That's another trick. Whenever you're going into a contract, oh yeah, we'll write up the contract. Don't worry about it, and then you can adjust it. You want to have that baseline
Right.
if you can. So walk me through an event. Like, first, walk me through like you say 12 to 24 events all over the country. What are some locations you do these things at, and what do those like mastermind 70, 80 person events look like?
Yeah. So basically, this year we're doing 22 events. Next year will be 30. And we spread them out across the US so that it's easy for everybody to come to a couple of events per quarter. So we host events in Los Angeles, Dallas, Fort Lauderdale, and New York City, like all the major big metro areas with the most wealth or near them. Importantly, 24 of our events a year are these investor mastermind types. So it'll be like 60, 75 people in the room. We start at 10 a.m. So you could fly in that morning if you want to, or drive there from a distance, come to the event. We get done at 3:30, maybe 4 p.m. You can head back home without having to stay overnight if you got kids and a spouse that don't like you being gone constantly. And then essentially it's a workshop training mastermind format. And like we'll have 5 decamillionaires and centimillionaires on stage in each of the 4 cities next week. For example, I'm doing events on Monday, Tuesday, Wednesday, Thursday, different speakers in all 4 cities, but the same content. We're focused on the wealth formula of family offices, basically. And that's our mastermind formats, 10 a.m. to 3:30 p.m. And then 4 to 5 times a year, we do these large investor summits that are 400 to 850 people and 75 to 125 speakers on stage over 2 or 3 days. But importantly, even those start at 10 a.m. So you can go to the gym, get your workout done, scan your inbox for anything that's exciting or you need to handle with your team, get a call done if you need to, and then come to the event with kind of like a clear head as a founder or as an investor.
Gotcha. I gotcha. Okay. And so these workshops, are they focused on helping you be more effective at raising capital? Are they working on vetting deals that are being proposed to the group? What does it look like there?
Yeah, so twice a year we'll do an artificial intelligence boot camp, and we'll literally spend the whole day live demonstrating and giving you time to play with our 40 plus ready to use artificial intelligence tools that are built out for deal makers, investors, founders, capital raisers, fund managers. We also have a second type of mastermind that's called a capital raiser boot camp. And that is basically like, here's what I've learned over 18 years doing this and helping structure and close over $500 million worth of deals. And then we'll have guest speakers who have raised billions of dollars or 100 million plus each, and they'll give their thoughts for 10 or 15 minutes each. But we'll go through worksheets and dozens and dozens of strategies to raise more capital. And then our kind of down the middle, the fairway mastermind template is really helpful to investors and capital raisers. So you can meet investors in the room. But also we talk about like, how do the ultra wealthy negotiate deals? How do they vet deals? What are the due diligence expectations and best practices? How do you joint venture with $100 million family? How do you work with publicly traded companies? How do you prepare for an exit, negotiate a deal, structure a deal? And we're basically saying these are like the best practices, the mental models and the processes that the ultra wealthy use to get wealthy, and they continue to use once they're wealthy.
Yeah, because that is a world that most people, including myself, are, ignorant of. It's like you just don't know how they think. You don't know how they act and make decisions. I had a meeting a few months ago with a billionaire and a couple calls and talking to him, and his mindset and the way he looked at opportunities. And after a few conversations, I was like, well, this is what I got going on. Like, what do you think? Like, I mean, I wanted his input on what I'm working on. And he was like, oh yeah, I would do this. I would do that. I would sell that. I would get liquid here, put that here. I mean, it was just like totally a different mindset just because I'm not a billionaire, and I haven't dealt with the problems he's dealt with and seen what he's seen. And so the access to that, it's like these people necessarily aren't smarter than you or work harder than you. They're just doing different things than you. And I see it's the same with like, are you going to buy a single family rentals for the rest of your life? There's bigger fish to fry. There's better opportunities to place money and to build a portfolio and to scale something than trying to cobble together 10 or 12 single family houses.
Yeah, for sure. I would say that 10 or 20% of the billionaires I've met are night and day smarter than most people I meet. I would say that the rest are not, though. I would say that 80% of them or more have an excitement, like Sam Zell talked about living life full throttle in his book, Am I Being Too Subtle? And I feel like a lot of the billionaires I meet have like a deep work ethic. They're excited about what they're doing. They don't complain about like, oh, I got to work all the time, but they're like amazed by what they've been able to get done, and they're excited to see how far they could go. And so when you compare their work ethic against people that complain about not being as successful, I do see a big gap in the work ethic and focusing on unique ideas and big ideas. So it's interesting to notice that. And the more I've interviewed billionaires, I've interviewed 47 of them, including Tony Robbins and Mark Cuban and Tim Draper and Grant Cardone and Jean-Paul DeJoria, and negotiating with Michael Saylor's team now to see if we can come to our next event. We'll see. But basically, it all comes down to mindset. It's like how they decipher a problem, how they think about business, patterns they recognize, rules they have for themselves in their head. Those are what I take the most notes on as I'm interviewing them.
Gotcha. And talk to me about the channels that these interviews are on. Is it a YouTube channel? Is it a podcast that you have?
Sure. Yeah. So basically at billionaires.com, you can stream and watch all the interviews I've done for free, with billionaires at least. And then at billionaires.com/books, you can get the Amazon links to the top 10 books I've read out of the 131 that I've read so far. And after I get done reading all 245 billionaire books, and these are not on billionaires, these are books authored by billionaires, then I'm going to be ranking the top 10 again and updating people on that top 10 list. And then we interview a lot of centimillionaires and decamillionaires on stage. So our podcast is called Centimillionaire Strategies. And if you go under playlist, there's a centimillionaire, like billionaire fireside chat mini series there. And that's like the most valuable content on our YouTube channel. Are those fireside chat interviews I do on stage at our events. And those are the most fun because you're literally interviewing like the winners in the game of capitalism,
Yeah, absolutely. So Centimillionaires Strategies is the podcast, or billionaires.com. You can listen to those interviews. I just wanted to put that out there. I want to write it down so that I look it up. So, and Eagle Scout.
Cool.
I saw that. I'm an Eagle Scout as well. So you're third generation.
Oh, wow.
Talk to me about scouting and why did you put that on your bio? Why is that important to you?
Yeah, I think that passing on values is more important than passing on money. And I think having the right values is what creates money. And I think the more that you're a class act in the family office space, the better you'll do. Like essentially, if you are not a class act, people are not going to want to work with you. And so just focusing on that is more important than anything else. And I don't know, I love outdoor adventure. I've been to Everest Base Camp, I've been to Machu Picchu. I've been to all these different places like that are just like amazing to visit. And I think that I wouldn't have that if it wasn't for, Boy Scouts and being in the Eagle Scouts. So I think it separates people like you and I from others. It doesn't make us better. It just says like, hey, this is like part of who we are. It's part of the fabric of our brain, as we are brainwashed as kids to act in accordance with the values of the Boy Scouts,
And my dad always said, I think it's like 1% of the boys that join scouting become an Eagle Scout, right? It just shows kind of persistence,
Right.
sticking with something. And there was a time, I think when I was about 14 or 15, I'm like, I don't want to do this anymore. And I was a Life Scout, which is the rank right before Eagle. And my dad's like, well,
Right.
you're never going to tell people that you were a Life Scout. Like nobody cares if you were a Life Scout, right? And if you stick it out and you do the Eagle Project and you go for another year and you earn the last 5 merit badges or whatever, you're going to be an Eagle Scout and you're going to be Eagle Scout for life. And it's something that, we don't start stuff and quit. And he implemented that as a young person. It's like, if you start something, I mean, obviously there's room to pivot and adjust, but for the most part, it's like, don't be someone that bails out, that doesn't see it through. That's not, a class act. So,
no, totally. And I think, I think that like one thing that I wanted to share real quick related to that is like when the values are top of mind and you know how you need to act in the world, it's less easy to go astray and mess up royally. Right. And so I think that's really important. And one way I try to kind of brainwash myself is I have this one pager and I have this laminated where I shave every morning. And it basically has like our family values. It also has my monthly, quarterly, annual goals. So I start out the day knowing where I'm trying to go and like what path I'm on and like what's the map in front of me to get to the top of that next summit or whatever. And then the bottom 2/3 of it is my mental framework of like how I need to think. So it's a bunch of rules on how my brain will work that will help me navigate that jungle, And I think that I don't hear about anyone else doing this, and it's free to do. It costs absolutely nothing, but you're just like brainwashing yourself at the beginning of each day to like, this is where you're going. This is how you're going to get there. And anytime you see something that is amazingly powerful that you need to do, you just put it on your one pager and then you just make sure that you're studying that one pager every day.
Yeah. I love that. I have a list of, my goals and my goals for the year. And then I have a list of my principles and I review them typically every Monday. I pull it up and I look at it, and I wrote the 10 principles because of going astray, where I had some success, and then, and they weren't necessarily they weren't unethical things I did. It was just mistakes that I made, losing my purpose and losing my vision and chasing profits and chasing money and really getting involved in opportunities that I didn't have the expertise in to know how to properly vet and making mistakes there. And so I'm like, I need to write these principles down. And then every time I'm pursued with a new opportunity, I'm going to run it through those gates. And, one of those gates is, real estate. Like if it isn't real estate, don't do it, because you're not an expert in AI or scaling HVAC companies or whatever the newest, craziest idea is. And I'm sure those people can make money, but you've already spent 12, 13 years studying real estate. Do you want to start over and go in a whole different and advise people to put money in these deals that you're really not an expert in that field? And that one principle has helped me a lot, of just like, man, if it's not real estate or real estate based where I can vet it and understand it and know the risks, then I shouldn't be doing that. So I like that you're looking at that every day. I should probably look at mine every day, but people don't do that, and they do they go astray.
Totally. Yeah, I do that. And then I think that's super helpful. You have to say no to almost everything, the more that's coming at you, right? Like when you're running a podcast like yours and you have a community, there's more requests per minute or hour than some people get per week or per month. And so you just have to say no to things that other people would say yes to. or even say no to things that last year's version of yourself would have said yes, but this year you're even busier. You want to have even more extreme focus. And it has to be better than everything else you're doing to distract yourself. And so, the other thing I do is my wife and I go to CrossFit. I try to be ultra healthy, not just ultra wealthy. I listen to, when I get my coffee in the morning, I read that one pager. I put on 5 minutes of like a David Goggins video. And then that way, by the time my caffeine's in my blood, I've got the one pager in my head. I just going to start my day with the right mental framework to get a lot done,
Right. Yeah. It's persistently doing it over time, and that hockey stick, It happens. It's just hard to consistently do the little things over and over and over and staying focused. That mastermind I mentioned, the leader of it, very successful guy. And I mean, that was one of his favorite things, was just like, stay focused. You got to stay focused, because I think that was one of the reasons why I fell astray, was because as I got success, there were so many people wanting to latch onto that. And I hadn't really ever had that before, and it was just like, oh, yeah, that sounds like a good idea. They probably have the same morals as I do. And they're probably good. And some of them weren't. And so it was just like, okay, I've got to protect myself here. I've got to really focus down on where I really bring value to the market,
Yeah, no, you're totally right. I think my friend Joe Polish says, if you're not sure about who you are and you become very successful, other people will try to mold you into what they want you to be for them. And I think that it's easy sometimes to work hard for a short period of time. But what most people can't do is perform high with extreme focus for 10 or 20 years straight.
Yes.
They either get into a bunch of lawsuits, falter, get in a fight with their business partner, get distracted, jump into 10 new things. And other people cannot match a laser focus with high execution and high iteration that's lasted, in our case, for 18 years. It's hard for others to compete against that, right? Like a publicly traded company could throw $3 million a year budget and hire $1 million a year cubicle jockey. And that person's going to try to catch up, get burnt out, get hired away and go somewhere else. And you and I will still be here. And so good luck trying to catch up on some level, but it's not really competing against others. It's competing against your former self and just seeing what's possible and, trying to cooperate with others versus compete against them,
So if this is resonating with someone, they're like, man, I really want to learn about the Family Office Club. I'd like to attend some of these events. I maybe want to go to the conference in Fort Lauderdale. Where do they go to reach out to you or your team and learn more about that?
Yeah, sure. So familyoffices.com is our main website. It has our event calendar. There's a membership application at the top. They could shoot me an email at richard@familyoffices.com or a text message. It's 305-333-1155. And if they're on the fence of kind of like, I don't know, is this thing real? I mean, it sounds real, but like, is it going to be high quality? Is it going to be one of these little angel investor events with 20 people around a junky table and a bunch of startups? And that's for sure not what it is. So if you go to our YouTube channel, there's lots of pictures on our website, but if you also go to our YouTube channel at Centimillionaire Strategies, you can see our interviews. You can see the ballrooms that we rent out. You can see the quality of the events. So I encourage you to check that out just to kind of make you feel a little bit more assured that you're coming to the right spot and that it's high quality and genuine and super fast moving. I'm the most ADHD person that you've met. So like if I get bored at my own event, we don't invite the person back. We do 5-minute talks from sponsors on stage, not 15 minutes, not an hour-long sponsor of some gold fund or some multifamily fund. It's like they get 5 minutes, they pass out a one-pager, they're off the stage before you know it. And we're like super fast-moving event format.
Got it. Well, Richard Wilson, familyoffices.com. That's the Family Office Club. You can also check out billionaires.com. But Richard, man, thank you for being on the show, sharing your wisdom and experience and really digging your way into this world and then sharing that experience with other people. So it's really awesome what you're doing.
Yeah, of course, Jennings. And if you want to come to our events next week and check one of them out or come to our annual event in December, love to have you there. And as our guest for having me here on the podcast. So thank you.
All right, man. I will talk to my wife, the big boss. All right. Well, thank you, Richard. And we'll catch you later. And until we meet next time, guys, remember to take the time to unlock your life. Peace.